Have you ever dreamed of financial freedom? The ability to live life on your terms, without worrying about your next paycheck? Imagine waking up every day with the peace of mind that you have enough money to cover your needs, your wants, and even your most audacious dreams. This is what we call financial freedom. Financial freedom is more than just having money. It's about having the liberty of choice in life. It's about being able to make decisions without being overly stressed about the financial impact. You want to take a year off and travel the world? Go for it. You want to switch careers to something you love but pays less? You can do that. You want to retire early and spend more time with your family? Absolutely. With financial freedom, these choices are all on the table. But financial freedom doesn't just happen overnight. It's not a lottery ticket or a windfall from a long-lost relative. It's a journey. It's a journey that requires planning, discipline, and patience. But the good news is, it's a journey that's within reach for anyone, regardless of their starting point. You see, financial freedom is not a destination exclusive to the rich and famous. It's a state of mind that anyone can attain regardless of their income or background. It's about being smart with your money. It's about making your money work for you, instead of you working for your money. It's about understanding that every financial decision you make today, whether big or small, can bring you one step closer to or further from your dream of financial freedom. So, no matter where you currently stand in your financial journey, remember this. Financial freedom is not a far-off fantasy, it's a feasible reality. You just need the right mindset, the right knowledge, and a solid plan. So, if you're ready to embark on the path to financial freedom, let's dive into the steps that can guide you there. The first step to financial freedom is creating a budget. Now, don't let that word budget scare you. It's not about penny pinching or denying yourself that morning latte. Instead, think of a budget as your financial GPS, guiding you towards your ultimate destination: financial freedom. Creating a budget begins with understanding your income and expenses. It's like taking a snapshot of your financial landscape. You've got your income on one side, your salary, any side gigs, maybe some rental income. And then, there are your expenses on the other side. Rent or mortgage, utilities, groceries, transportation, and yes, even that morning latte. This snapshot gives you a clear picture of where your money is going, and often it can be a real eye-opener. Now let's talk about savings. You might think, I'm barely making ends meet, how can I save? But here's the thing, a budget can help you identify areas where you can save. Maybe you're spending more than you realize on dining out, or perhaps those streaming subscriptions are adding up. Once you've identified these areas, you can make conscious decisions about where to cut back. But a budget isn't just about controlling spending. It's also about planning for your future financial goals. Want to buy a house? Start a business? Retire early? By allocating a portion of your income towards these goals, your budget becomes a roadmap to achieving them. And let's not forget the power of automation. Setting up automatic transfers to your savings or investment accounts can make sticking to your budget a breeze. It's like setting your financial GPS on autopilot. So take the time to create a budget. It might seem tedious at first, but once you get the hang of it, you'll see that it's a powerful tool in your financial freedom toolkit. And remember, a budget isn't a restriction on your spending. It's a plan that helps you spend your money wisely. Now that you have a budget, it's time to start building an emergency fund. An emergency fund, my friends, is like a financial lifeboat. It's there to keep you afloat when unexpected expenses threaten to sink your budget. Think of it as a safety net for your finances. It's not about if you'll need it, but rather, when you'll need it. So let's talk about the size of this safety net. While the exact amount varies based on your lifestyle and expenses, a good rule of thumb is to have 3 to 6 months worth of living expenses tucked away. That's enough to cover rent or mortgage payments, utilities, groceries, and other necessities if you were to lose your main source of income. Now I know what you're thinking. 3 to 6 months worth of expenses? That's a lot of money. And yes, it is. But remember, Rome wasn't built in a day, and neither is an emergency fund. Start small and gradually increase your savings. A little bit here, a little bit there, and before you know it, you've built up a sizable safety net. Here's a pro tip. Automate your savings. Set up a direct deposit from your paycheck to your emergency fund. Out of sight, out of mind, right? You'll be surprised at how quickly your savings can grow when you're consistently contributing to it. And remember, an emergency fund is for emergencies only. It's not for that new phone you've been eyeing or that vacation you've been dreaming about. It's for those unexpected expenses like car repairs, medical emergencies, or job loss. So, let's recap. An emergency fund is a crucial part of your financial freedom roadmap. It provides a safety net for unexpected expenses, ensuring that you don't have to go into debt to cover them. Aim for 3 to 6 months worth of expenses, and start small. Automate your savings to make the process easier, and most importantly, use it for emergencies only. An emergency fund is your financial safety net. Start building it today. Once you've got your emergency fund in place, the next step is to tackle any outstanding debt. Debt, my friends, is like that unwanted house guest. It overstays its welcome, eats all your food, and leaves a mess. And just like that guest, it's time for your debt to hit the road. Eliminating debt is a crucial step in our journey towards financial freedom. It's like trying to run a marathon with a backpack full of rocks. The more debt you carry, the heavier your backpack, making it harder to reach the finish line. But don't worry, we've got a couple of strategies to lighten your load. First up is the snowball method. Picture this, a tiny snowball rolling down a hill, gathering more snow as it goes, growing larger and faster. That's exactly how this method works. You start by focusing on your smallest debt. Once that's paid off, you move on to the next smallest, and so on. The idea is that as you pay off each debt, you gain momentum, making it easier to tackle the larger ones. Next, we have the avalanche method. This is like climbing a mountain from the steepest side. You tackle the debt with the highest interest rate first. This method can save you a significant amount in interest payments over time. However, it requires discipline because it may take longer to see progress. Now, you might be wondering which method is best. Well, that's like asking whether a cappuccino is better than a latte. It all depends on your taste. If you're motivated by quick wins, the snowball might be your cup of tea. If you're more concerned about interest, then the avalanche could be your brew of choice. Ultimately, the best method is the one that works for you, the one that keeps you motivated to continue paying off your debts. Because remember, every time you pay down a debt, you're not just getting rid of a financial burden. You're also taking a step towards financial freedom. Remember, every dollar you pay towards your debt is a dollar closer to your financial freedom. With a budget in place, an emergency fund set up, and your debt under control, it's time to start growing your money. Picture a tiny seed, planted in the right conditions, receiving the right care. It has the potential to grow into a towering tree. Similarly, your money, when invested wisely, can grow exponentially. This is the power of investing. Now you might be wondering, what exactly is investing? Well, at its core, investing is the act of committing money or capital to an endeavor with the expectation of obtaining an additional income or profit. It's like planting that seed and waiting for it to grow into a tree, bearing fruits year after year. There are numerous ways to invest, from stock markets and mutual funds to real estate and small business investments. Each of these comes with its own set of benefits and risks, and it's essential to understand these before diving in. For beginners, mutual funds can be a good starting point. These are investment programs funded by shareholders that trade in diversified holdings and are managed by professionals. They offer the benefit of diversification and professional management, which can be particularly useful for those new to the investing world. Another popular option is the stock market. Investing in stocks essentially means buying a small piece of a company. As the company grows and profits, so does your investment. It's like being a tiny co-owner of a potentially successful enterprise. Now, investing isn't a get-rich-quick scheme. It's a long-term game. Think of it as a marathon, not a sprint. It's about consistency, patience, and letting the magic of compounding work its wonders. The key to successful investing lies in starting early, investing regularly, and staying invested for the long term. Remember, time in the market is often more beneficial than timing the market. Investing may seem intimidating at first, but it's a crucial step in your journey to financial freedom. Start small, learn as you go, and watch your wealth grow. So there you have it, the roadmap to financial freedom. In a nutshell, we've covered creating a budget, building an emergency fund, paying off your debts, and finally, investing to grow your money. It's not a walk in the park, but it's definitely worth it. This journey requires determination, discipline, and a well-laid plan. Remember, the journey to financial freedom is not a sprint, it's a marathon. But with determination, discipline, and a solid plan, you can achieve your financial dreams. Start your journey today.